Roth IRA has income limits. For 2024, if you're filing your taxes as single and make less than $146,000 of adjusted gross income, or $230,000 if married, you are able to contribute a $7,000 to Roth IRA. Now, the problem becomes where you make more than that and still want to contribute. For example, if you make more than $161,000 or $240,000 if married, you cannot contribute it to Roth IRA directly. This is where the Backdoor Roth strategy comes in play. So, what is a Backdoor Roth? Backdoor Roth is a strategy that allows high income earners to contribute to Roth IRA indirectly through a traditional IRA rollover. So, here's a step-by-step guide. The first thing that you want to do is make traditional SEP or traditional simple IRA zero balance. For example, I personally had a $3,000 rollover traditional IRA account, and the first thing I did is transferred it to my 401k with no tax impact. The reason behind this is you don't want to be subject to the pro rata rule on your contribution. That will simply cost you too much in taxes. I generally recommend doing this before doing the Backdoor Roth strategy. This is why this is step number 1. But you have until December 31st to roll the balances into a 401k or 403b. The second step is to open a traditional IRA account. You can register one or you can use the one you already have. For simplicity purposes, it's best to have both Roth IRA and traditional IRA with the same company, like Vanguard, Fidelity, Schwab. Now, you need to contribute it to a traditional IRA account. The Backdoor strategy is, instead of contributing to a Roth IRA, you will make a contribution to a traditional IRA, and then we're gonna do a rollover. You can contribute it a maximum amount of $7,000 for 2024 all at once, or you can spread it out across multiple deposits. The next thing you do is you wait once the money settles within the account. Usually it takes 1 to 2 days for that money to settle. Now, an important step is do not buy anything within an actual account. So don't buy any ETFs or any stocks. We will do that once we complete the rollover. Now, after your money settled, the next step is to roll your traditional IRA to a Roth IRA. If both traditional and Roth IRA are within the same company, you can, generally speaking, do it online by yourself. Just click into a traditional IRA account and you should see something along the lines of rollover to. If you don't have a Roth IRA account still, just simply go ahead and open one. If you cannot complete it online, just simply call the company with a traditional IRA account and tell them, I deposited an after-tax amount of whatever. I want to roll it into my Roth IRA. I'm doing the Backdoor Roth strategy. Some of the agents might be familiar with it, so that's why you want to specify that. And they will be able to help you out and process all the necessary forms. Two important things that I want to add for this step is timing. So you want to complete this rollover as soon as possible. The reason is you want to minimize the earnings within your traditional IRA account. So that brings me to step number 2, earnings. Now, if money grows within your traditional IRA account, you will be subject to tax on earnings when you complete the rollover. If you do it quickly, you might only earn $1 to $2 depending on the settlement fund and whatever the interest is. Now, the rollover is a non-taxable event since you contributed after-tax dollars to your traditional IRA account, and Roth is an after-tax account. There is no tax on the actual contributed amount. After your money is within your Roth IRA account, you would want to invest that money in whatever your asset allocation is. You may ask, what happens during the tax time? When you file your 1040 tax return, you will need to complete a Form 8606. The form will simply tell the IRS that you completed a non-deductible traditional IRA to a Roth IRA rollover. If you're using a tax software, it will ask you questions like how much did you contribute, how much did you roll over, what were your balances within traditional IRA accounts, and questions similar to that. I will also create an in-depth video about Form 8606, so make sure to subscribe and stay tuned. If you've done everything correctly, and this is how you can actually double check your CPA or double check the tax software, line 4B of your 1040 return, it will say 0 or a few dollars, or you can have the word rollover. You don't want to see $7,000 on line 4B. That means you complete something wrong. To summarize, Backdoor Roth strategy is simply contributing to a Roth IRA with just one extra added step. So you contributed to a traditional IRA and then you roll over the amount into a Roth IRA. Now, when you contributed to into a traditional IRA, you don't get any tax deductions for the contribution, and that's because we're going to roll it into a Roth IRA, so similar case there. When you convert it, you also have no tax impact. A few things, just make sure you file a Form 8606 and keep good records. In case you want to withdraw from Roth IRA in the future, you want to show exactly how did the money get there. And make sure to invest within that account. I've seen many people don't invest it and 10 years pass and they're still holding cash in their Roth IRA account. Now that's it. It's a pretty simple strategy. You just have to make sure you do it correctly. Make sure to leave a like, subscribe. I'll have a lot more videos coming in the future. So hope you enjoyed this one.